So past 5 years, I've averaged 64% win rate on trades. They say good traders win about 50% of the time. So I'm very happy with that average. And I'm not saying I'm the world's greatest trader. And what I've learned is this is a very humbling game. And when you think you have the market figured out is usually when you lose the most. So what I like about StockTA is I've been able to incorporate it into my process, and it's just part of my routine now. And that was the other part of it. When the guy told me he's taking the site down, I'm like, oh man, like I'm gonna have to figure something out, or I'm gonna have to buy this. So I just bought it, and now I get to use it every day.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. Today we have a fantastic discussion lined up. We're fortunate to have with us Kevin Steuer. Kevin is a technical analyst who's worked with John Fennick and Don Durrett, among others. He's also the owner of a software called StockTA.com. Kevin, thank you so much for joining us today.
Thank you for having me on. Really looking forward to our conversation.
So let's begin with a look back on 2024. From an economic and market perspective, what surprised and shocked you? What fell right in line with expectations? And what are you expecting moving into 2025?
Yeah, I wasn't in the hard landing, crash landing camp that a lot of people were on TV. I didn't see it in the technicals, and I know the Federal Reserve gets a lot of flack, but I think they've done a pretty decent job this year, kind of threading the needle with trying to get inflation back in line, employment numbers. The economy's been pretty steady, and I mean, I've done really well this year in the market, and I've just had a lot of fun trading this year.
So what are you expecting moving into 2025? Not just because we're turning the calendar, but also because we have a new administration coming in.
Yeah, I think the Trump factor is going to be really interesting, and I'm apolitical. I'm registered independent, so your viewers, please don't cancel me. But I think Trump he's not your typical politician, right? And he's proven that. And when he first got elected, he picked a lot of typical Washington people for his cabinet. And by the end of his term, he had turned through a lot of those people and fired a lot of those people for whatever reason. And now some of his cabinet picks and people he's picking, I think, have turned a lot of heads. And I think he's definitely thinking outside the box. Now, I don't know if that's going to be good or bad in the long run, but the thing I'm really paying attention to is him and Powell are kind of already getting in a little bit of a scrum. And I don't know if people remember this, but do you remember what presidential bust Trump had behind his desk in his first?
Hamilton.
But what he had Hamilton, but what president?
Was it Abe Lincoln?
Andrew Jackson.
Andrew Jackson.
Now, what did Andrew Jackson do?
Go ahead, tell.
Yeah, him and Nicholas Biddle back in the day got in a big fight over the bank. He called him. Let me see if I can find the quote. I have this in my notes. He said, "Gentlemen, I've had men watching you for a long time. I am convinced that you have used the funds of the bank to speculate in the breadstuffs of the country. When you have won, you divided the profits amongst yourselves. And when you have lost, you charge it to the bank. You tell me if I take the deposits from the bank and annul its charter, I shall ruin 10,000 families. That may be true, gentlemen, but that is your sin. Should I let you go on, you will ruin 50,000 families, and that would be my sin. You are a den of vipers and thieves." So he vetoed the bank charter in 1832, and the national bank was totally dismantled by 1835. Now, I'm not saying Trump's going to dismantle the Fed, but when you have Elon in there and you have Vivek in there and they're thinking of some really outside the box ideas, if him and Powell aren't getting along, I'm really curious to see what path he's going to take.
Yeah, it's going to be really interesting. One of the things that's really been exciting to listen to, a lot of people are really excited about this, is is the two of them, Elon and Vivek, with the Doge group coming in to cut costs. Cutting costs is a really good thing. However, do you think there's some short-term pain from those cutting that's going to take place?
I think so. And I think if they're smart, they go in early and often because they don't want this to linger. And then it comes into midterms and they lose control of either the Senate or the House. So, I mean, they're doing a lot of talking. I hope they have a plan. I hope whatever their plan is works for the good of America. But I mean, you look at all the federal jobs that have been created and you look at the job reports and something like, I saw some crazy stat, like 21% of all jobs added this year were government jobs. So like, if you take that out of the GDP, what does that do? What does that do to housing markets in areas where there are a lot of federal employees? Like, I think there could be a lot of ripple effects. And I'm curious, like, they're smart people, right? Like Vivek has done a really good job, running some of his companies. I'm not a biotech guy by trade, but it seems like he's very smart in that area. I mean, Elon's built some major companies, probably the world's wealthiest man, according to some metrics. Like, you don't have that much success if you're not really smart. So I'm hoping that they've thought through all this. Like, I don't think they would do it, and I don't think Trump would approve it if he thought it was going to tank the stock market. Like, if you remember from Trump's first term, he was tweeting out all the time, market all-time highs, job report, great. Like, he was very...
He's been relatively quiet on the market this time around.
Yeah, which that I'm curious about because I'm wondering, like, I mean, he had a lot of tech bros and crypto guys like with his campaign, and now, since he's been elected, crypto's gone berserk. So I don't know. Like, I don't know if crypto has a place in the I'm not an expert on crypto. Like, I've bought Litecoin and it's up like 70 or 80% since I bought it. I bought Ripple, which I think is like XRP. Really don't understand Ripple. I bought that in the low 40s, and that's like, I think it was over $2 yesterday. Again, have no idea what utility it has no idea how the government could potentially use it, but you see all these people speculating on it, and that part I do think is dangerous because I think I'm pretty educated about the market, but now I'm investing in stuff that I really don't understand, and I'm not putting a ton of money into it because there's a lot of risk. But you see people putting their life savings into it, and I would hope they have a better understanding of it than I do. But if this doesn't turn out for them, if Trump comes in and says, hey, we're going back to the gold standard and crypto's worthless to me, what happens?
Fair question. So you mentioned the word risks. Kevin, what are some of the risks that you see for the economy, the markets, as we move into 2025? What are you watching for?
Yeah, I'm watching inflation. I mean, I've been on a couple other podcasts. Like, I've been long the inflation trade. Like, INFL is a great ETF for that. Has a kind of a mixed basket of some gold companies, some royalty companies that have great margins during inflationary times, some oil companies. I'm really curious to see what the Fed does here at this upcoming meeting. Powell kind of changed his rhetoric a little bit on his last speech a couple of weeks ago, saying, oh, we got to measure the data. Inflation's coming back a little bit, but I wouldn't be surprised to see CPI, either, I don't know if it'll be Q1, but I wouldn't be surprised if Q2 or Q3, you see it with a 3 handle in front of it, and that might freak some people out again.
Do you see the tariffs and the tax cuts as being inflationary?
I think the tariffs could be. I mean, it's interesting. I talked about Andrew Jackson before, but he used tariffs too. And if Trump is kind of modeling, what he wants to be after that, I mean, Trump's shown he can do tariffs. So he's a negotiator. I think people forget that. And I feel like he's one to, they ask for, you have younger kids and they say, hey, Dad, I want a horse. And then you end up getting them a dog, and they wanted a dog all along, but they asked for the horse knowing you wouldn't get them the horse. So I'm curious if that's kind of Trump's strategy right now, is he knows what he wants, but he's going to ask for something ridiculous because he's shown he's good at doing that and managing, controlling the narrative and managing the message. I think it's been really interesting to see just if you follow the narrative of inflation, like you had 0% interest rates or very low interest rates after the great financial crisis, and that killed savers, right? Like people on fixed income, retirees, they couldn't buy CDs, they couldn't put their money, so they had to take risks. Then it was last year or 2 years ago, I bonds were like 7%. Even I was buying I bonds, and I hate dealing with the government site. It's a pain in the butt. It's so archaic. But I'm like, this is free money. And then this year when inflation was hot, who'd they blame? You remember who they were blaming?
Grocery stores.
Well, but they were blaming retired people. They said they're overheating the economy. They're spending too much. They're traveling too much. Seriously? Like, you've taken away people's ability to save for 15 years, and now they can save, and then you lock people up for 2 years, and now they want to get out and travel and do things. And now you're telling the boomers, oh, no, you can't live your life now because it's hurting our economy. Like, I really don't understand sometimes how, like, I don't know. I feel like sometimes the government numbers, it's a lot of just, hey, look over here, and it's really over here. And, they change how they measure the CPI. Oh, we'll take food or we'll take energy out of it. Cool. What am I, Fred Flintstone? Am I gonna self-propel my car to work? Like, I need to eat.
Exactly.
Like, I think it's really, I just don't think there's a lot of accountability to it, and I don't think there's a lot of transparency. And I think they're really good at blaming other people instead of taking ownership for like something like the money supply increased the 2 years after COVID by 51%, I read. And then they're blaming elderly people for going on cruises for inflation. Like, I don't think people really understand what's going on. And I'm not saying it's a big conspiracy, but I think in some ways the government wants it that way because, I don't know if we should really be happy with a 2% target inflation rate. Like, who decided that? Like, Bernanke just came out and said that one day. Like, that's not in the Constitution. Congress didn't say that. President didn't say that. But if you have 2% inflation over 20 years, like if you're retired and your pension's 50K, 50K 10 years ago was a decent amount of money. 50K now is not much. Where's 50K going to be 10 years from now? And I really worry about what that means for people as you retire. Like, I'm always checking my retirement account. I'm like, am I going to have enough money to retire? Like, I don't want to be one of those people living, on food stamps when I'm 70 years old.
Well, you're talking purchasing power loss here, and really, if everybody would maintain a 5 to 10% allocation of gold, which basically tracks purchasing power, then that would take care of that.
No, that's true. That's a good point.
So some analysts are comparing the market run-up that we've seen over the last year, but also really, post pandemic to the dot-com bubble. Do you see today's markets as being in a bubble? Several of the folks that I've interviewed say yes. Several of the folks that I've interviewed say no. Where do you stand on that?
I don't see it right now. I mean, for when I'm looking at risk, like I look at the VIX, and anything over 30 is danger zone for me. Now, I think the VIX has been a little manipulated with the 0, day trading expiration options. Like, I thought we were gonna have a VIX spike at the end of the summer, and I went to cash for a while. No, I think it went to 65. I didn't see it. I didn't see it going up that quick, that fast, but that always is kind of in the back of my mind because I just feel like if something can go up that quick, there's a lot of leverage in the system. So I watched the VIX. I watched the 10-year, like anything above 4.7. Usually causes some issues. And I watched the Mnt&x. Like, I was watching that closely before the election, like anything over 130 and the bond market seems to seize up. So I just always keep an eye on those. Now, it's not always 100% accurate predicting kind of the future of it, but it's so hard to see some of these bubbles. Like you talk about, the Big Short and how many people really saw that coming and how many people really made money. Like, it was such a small percentage of the population. I'm reading a book right now. I think it's called Crash Landing, about how basically some of the top CEOs navigated the COVID crisis. And it talks about how Bill Ackman was one of the people who saw COVID coming, and he he sold basically the same product that the Big Short guys use for the housing market. He used that, and it was his most profitable trade ever. So I think something like COVID is a little easier to see than like a dot-com bubble. I mean, some of these tech companies, the valuations are starting to get stretched, but I think AI is kind of grown with it. Like I've I bought some of the AI apps when they first came out, and I spent like $100 on a member for life, and now they're charging people like $20 a month. But like where that technology was 2 years ago to now, like 2 years ago, I couldn't really use it a lot, but I thought, hey, I'm trying to invest, in something near the bottom and watch it. And like now we use it for code. Now we use it to, it's amazing the vast array of applications. So, tech's grown, but I still think it's still kind of justified the valuations because of just the big impact it has on day-to-day life.
So, Kevin, in your analysis, are commodity equities deeply discounted versus the commodities that they produce? And do you expect 2025 to be a breakout year for some of them? If so, what commodities are you watching right now?
Yeah, I think, I think the long-term play here is inflation. I mean, I think the government's going to try to inflate their way out of this. And I mean, Paul Tudor Jones came out in, I think, early November, and he said, hey, the playbook's here is inflation. Like, there's no other way. I don't see any other way out. Like, they're going to inflate away the debt. So, I mean, he flat out said, he's like, I'm long gold. I own zero fixed income. So it's curious. I'm really curious to see, 10 years from now, somebody does a study, your average, 60-40 portfolio. What's that performance going to be from, say from COVID? So from 2020 to 2030, I'm really curious to see how that, playbook is going to stack up against somebody who owns gold, owns some of the commodity stuff, because I think, I'm long INFL. I think gold's going to do well. I think it's going to consolidate a little bit. It's popped a little bit today with the South Korea, martial law stuff, but that'll be out of the headlines in a couple of days probably. But it's going to be really, I think a big factor with gold is going to be the BRICS thing. And Trump came out and said, hey, like BRICS isn't going to be a thing. Now, I don't know how much power he really has to stop that, but I think gold is taking a pause here because I think crypto's stolen some of its thunder. Now, the crypto rally could end today, could end tomorrow, could end a month from now, but I feel more comfortable owning gold and gold miners and gold royalty plays longer term than I do some of these crypto things. Now, that could be totally wrong. I own some of both, but I just have a hard time investing in stuff that doesn't really have like tangible value. Like I know what Franco-Nevada's business model is. Like they have like 6 full-time employees. I think they're the most profitable company on the planet. Like some of these gold, even silver companies are just generating massive amounts of free cash flow. And I don't think people really understand that. And it shows up in the technicals, but I don't think, the bigger funds, they move the market. And imagine if some of these bigger funds start buying some of these smaller companies. I mean, the gold market is nothing. The silver market compared to the gold market is nothing. But if you have people start piling a Pan American, like that stock is pretty tightly held. Like the ramp up on that could be huge. Now, I'm not saying silver, some people say, hey, silver's going to 500. I have no clue. I'm not great at predicting that. I just look at what's it doing on the day to day. I am watching like silver this morning. I was doing some research. It was just under 31. And I have the trend line for that at 31.54. So it's technically bearish trend right now, which is not a great setup. But I mean, the trend for gold is, I have in my system 26.56. I mean, if you would have told,
Slightly ahead of that, isn't it?
Yeah,
It's at 2660 something right now.
yep. So I want to see that trend line hold. But I mean, if you told some of these gold CEOs who are producers, hey, I'm going to give you gold above 2,500 for basically a full year, they'd be lining up out the door saying, yeah, we'll take that. Now, have some of their costs crept up? Yeah. but the ones who have done really well, like an Agnico, like they're getting their ASIC down, and then it's just way more free cash flow. So I think, gold can do well. Oil I think has been really held down, but if you look at the break even cost of the Permian, most of the companies it's between 65 and $68. So I don't see oil staying below that long term because the Saudis need the Permian producing. Like we produce so much oil, and I don't think people realize it. Um, so I've been a buyer of oil when it's down in the, high 60s, and when it gets up to 90, I sell. Like I've done a really good job just kind of trading within that range, and there's some really great companies done really well with VNOM, Viper Energy. Like that's if you look at that chart coming out of COVID, like that's been an unbelievable company. They work with Diamondback Energy, which is Fang. Like that's another great oil stock. Like there are some really good oil stocks that they've done a good job managing their balance sheets, and they've taken the right amount of risk that they've been able to benefit from, upswings in oil going up to 90 without, having to lay people off and, close down wells when oil goes back down to 70. Like I think if you find the right companies, in any sector, but you find the right 3 or 4 companies for gold, silver, oil, copper, like they offer so much torque to the, spot price of that commodity, you can really do well if you find the right companies.
So you're seeing, I don't want to put words in your mouth, but you're seeing in 2025 a potential breakout in the gold and silver miners.
I don't know if they'll, I'm not saying, GDX is going to double, but I think it can keep trending up. And, if you've gotten in at the right time, or even if you trade in and out of it, I mean, if GDX goes up 10 or 20%, that's still a really good year. I think my trading style is a little different than some people. Like I don't like to take big drawdowns, so I try to hit singles or doubles, and then, I'll try to take a free ride on some position. So like Palantir, I build into that, and then, if I buy in quarters, I'd sell half of it once it gets to a certain point. I've made all my money back. I've locked in a gain, and now the rest of it's just running. And I can decide whenever if I'm selling it or if I'm going to hold it and see what it does. So I take that same strategy with any stock I buy. So if I'm buying Agnico at, I think it was like $40 early in the year, and it's run up, it's basically doubled. Like I have some free shares. Like I'm going to see what it does. And I think it just, position sizing is huge, and then entries and exits huge. Like it's great to make money, but I'm more focused on not losing money, if that makes sense. Like I don't want to take big drawdowns, because unless you have unlimited capital and you can just pour money in and just sit on a company for 6 months or a year and be like, oh, they'll rebound eventually. Like I don't have the patience for that. So I think you got to know yourself, and you got to know your trading style with what you're comfortable with. But, true breakouts are really rare. Like if you look at charts, like you might only get a couple like A+ entries for some of these companies throughout the whole year. So I think it's important to have a system where you try to catch those, and you really set your risk reward where it's, 3-to-1, 4-to-1, and you ride that up, you take your profits, and then you see, hey, like gold did really well for a little bit. Maybe oil's next, maybe copper's next. Like I'm pretty sector agnostic. I'm pretty ticker agnostic. Like I've worked with John and Don, who are, experts, and they're so good in this field. Like I've learned so much from them that I have the ability to kind of jump between different metals and use the same principles to hopefully make money on all my trades.
So you made the reference to silver. You were talking about a trend line and that it's slightly below trend line right now.
Yep.
What's your expectations as far as 2025, a breakout for silver in 2025?
If the economy keeps up and if inflation does what I think it's going to do, I think silver could trade above 35 for most of 2025 and maybe touch 40. It is an industrial metal, so if something weird happens and the market tanks, I could see, 30 being a struggle, and I could see it being more range bound between 25 and 30. But I could see, I mean, I love trading silver stocks. That's probably one of my favorite things to trade. And they have so much volatility and they're so hard to trade. But if you find the right ones and you get in at the right time, silver's for whatever reason, for me, I have a better win rate with silver than I do with gold, and I just really enjoy trading it.
So speaking of gold, Kevin, it pushed all the way up to like 2,800 or close to it pre-election. Post-election, it came all the way down to around 2,500. It's been bouncing between 26 and 2,700 since. It's somewhere in the upper 26 range. It seems to have stabilized right around there. Every time it consolidates since it's broken out early this year, the dip is getting bought. Yep. And a new leg higher is ensuing. Are you expecting that this time around? You know, it's down a couple of $100 or $150 since the election. In your analysis, is gold in a long-term bullish upward trend where the dips are just going to get bought up over some period of time and then it's going to move higher again?
Yep. I mean, I keep my technical analysis really simple. I look, is it making higher highs and is it making higher lows? And for the most part, gold's done that all year. So for right now, I have gold's trading range between 25.73 and 27.39. So it's still pretty tight range, but like, again, 2,700 for a lot of these companies is very economical. And I think gold, like I said earlier, I think gold took a little bit of a pause because gold's not exciting and crypto is. And I think, you know, Trump gets in, Dogecoin takes off, Ripple takes off. Who knows? Like, I have no clue what crypto is going to do next year. I get people emailing me, hey, what do you think crypto is going to do? I have no clue. I don't think anybody knows. I've seen some people who are self-proclaimed crypto experts saying Ripple's going to $20 a share. That'd be unbelievable. That'd be great for me. I'd be happy with $2 a share, but like not being able to value something that has basically $2 to $20 potential is crazy. And I think that's kind of what worries me a little bit about the market is there's just almost too much easy money out there. I mean, I don't know if you saw the art that sold in New York City. It was $6.1 million for a banana.
Yes.
Duct taped to a white piece of paper, basically, white poster board. Like that image has kind of stuck in my mind with crypto. And I'm like, man, like, is that a sign of a bubble? Like to spend $6.1 million on a banana. And then I researched the guy a little bit. He's had some issues with fraud in the past. So I think it more of a marketing play on his standpoint, trying to shed the, hey, I got in trouble with, I think he was with FTX and got rolled up in that. And he'd rather be known as a guy who spent $6 million on a banana than a guy who got charged by the SEC with fraud. But just the fact that there's that much easy money out there is a little worrying to me. And that's where, you know, if the crypto bubble does implode, I think some of those people would come back to gold. And again, like, I don't see gold going anywhere. I don't see a Fed coin coming out to replace gold. I mean, I don't see a way how we totally move away from it with all the debt we have and other countries being able to say, oh yeah, like gold doesn't matter anymore. Like I think China and some of the countries in the East have imported so much of it in the last couple of years that they're not going to freely give up that. If anything, I think they're going to want to revalue it. And if they revalue it, now those gold miners, they really have a lot of torque.
So this would be a good spot to steer the conversation towards, is the Fed with the interest rates, do they have it in the restrictive zone or is it too low? But instead of going in that direction, let's move over to your software, StockTA. Let's stay at a high level to start with. What is StockTA? What are the benefits that the users gain from it? And how much does it cost?
Yeah, so StockTA was originally created in 1999. I'm not the original owner. I was laid up on bed rest in January. I had hip surgery and I was bored and I reached out to the owner and I was trying to trade stocks from my phone and the site was down and I had used the site for 5 years before I bought it and really liked it. And the previous owner said he took it down. He didn't have time to manage it. His kids were getting older. So I bought it from him over the summer. Found a tech guy to help me redo it, and we used modern day AI to go back through all the formulas and the algorithms, and we updated a lot of stuff. We made it more efficient. We back tested it. It came out really well. We have 161 million lines of code. We cover 192,000 tickers, and it's free. And the reason it's free is this is a passion project for me, and I'm doing it to try to help Main Street people. I think a lot of people, when they're trading, think that they're trading against me and you. And I saw a stat from JP Morgan that they said 90% of all US equity trading is done by computers, which use algorithms. So the 10% that's me and you, we're not moving the market. Like I can buy, however many shares of GDX, but when a hedge fund or an institutional fund or a retirement fund comes in, that's what really drives the volume and that's what drives the price. And I just think a lot of people have gotten caught up, whether it's in crypto or other things. I see on Reddit, I'm a member of some of these communities. People are YOLO on their life savings on options on these random companies with no due diligence. And then they're losing, 50, 100, 250K. And they're gambling. It's like they're at the casino. They have no process. So what my goal is with this is I'm trying to give the average investor who works 9 to 5, coaches their kids' little league team and doesn't have time or doesn't understand technical analysis, the tools that they can have a better chance to compete with some of these bigger funds that really drive the market, that have their own proprietary algorithms, that have really advanced systems that, just an average retail trader has no chance of having any access to.
So when you and I had a previous conversation a few weeks back, you had mentioned a success rate in your trading in using StockTA. Can you share that story with us?
Yeah, let me find my notes, make sure I say it right. So past 5 years, I've averaged 64% win rate on trades. They say good traders win about 50% of the time. So I'm very happy with that average. And I'm not saying I'm the world's greatest trader. And what I've learned is this is a very humbling game. And when you think you have the market figured out is usually when you lose the most. So what I like about StockTA is I've been able to incorporate it into my process. And it's just part of my routine now. And that was the other part of it. When the guy told me he's taking the site down, I'm like, oh man, like my trading's I'm gonna have to figure something out, or I'm gonna have to buy this. So I just bought it and now I get to use it every day.
So Kevin, let's move on to some of the functionality of the system. Tell us about the Confluence system.
Yeah. So we measure things a little differently than some of the other technical analysis software out there. Basically, we put emphasis on the opening price and the closing price, but we measure the price movement throughout the day. And then we have our algorithm.
Would you like to pull up the software?
Sure.
And while you're talking, kind of point to a few areas?
Sure. You see my screen?
I can.
Okay. So this is GDX. We did a software update over Thanksgiving break, and it's taken a little longer to implement, but we'll be back up and running soon. So GDX, if you look, we have all these different technical analysis that we run. And basically, the machine runs all the data, does all this analysis, and spits it out to create confluence numbers. So confluence is just a fancy term meaning where things meet. So the higher the confluence, the more things intersect. And the higher the confluence, that would be greater support or resistance level. So if you look at GDX, it was 37.29 on November 26. Resistance was 38.45. Confluence of 21 is very high. And then 3's low, 6 to 10 would be more of a medium. But
So you would
basically, if you try to,
I'm sorry. So you would
yeah,
expect the 38.45 to be a resistance level?
yes. So we measure the trend and basically it spits out a score. So -1 is the most bearish something can get, and +1 would be very bullish. And that's the most bullish something can get. So it creates a trend score. So neutral, it says this is probably going to consolidate for a little bit, which GDX has done since then. And until it breaks out over that number, it's probably overall still going to be, you know, in bearish trend or neutral trend until it breaks through.
Okay.
And what I like about it is some people have been doing technical analysis for years and you can spot support and resistance levels on your own. But if you're not a sophisticated trader, pulling up your own chart and running all this stuff and trying to get these numbers would take you a lot of time. So basically, you can come to the site, type in, whatever symbol you're looking for, and it'll spit all that out for you. And then you can click on, exponential moving average, and it'll tell you. And this is part of how we measure things. Like if the 5 days below the 13-day EMA, that's bearish. If it's above, that's bullish. It'll do Fibonacci analysis, and it'll tell you, like, here's the 38.2%, here's 50%, here's 61.8, what those values are. And again, some people either don't have access or the ability to do it, or they don't understand it. So what I like about StockTA is it takes a lot of complex information and it does all the hard math for you, and then it presents it in a very easy, understandable way. With trend scores and your confluence of support and resistance. So I would not be long GDX in this situation until it broke above that number, because a lot of times if, people understand technical analysis, if you have major resistance, if it breaks through that, that usually becomes major support. So then on the flip side, if GDX is breaking out, if something does a hockey stick going up, you're going to have very little, support numbers on the side. So Tesla's done really well since the election. So Tesla, if you look, it has a lot of twos, which is not major support. So that wouldn't hold on a pullback most likely. So you want scores that are, above 5, above 10, because those are major numbers.
If you scroll down a hair, I think I saw a larger number there.
Yep. So 9.
15.
Yep. 15. So that would be like major support. Now, if Tesla is trading at 338, all the way back to basically 218, that's a long way back down. So again, you want to make sure there's support levels along the way, and you want something that's stair-stepping its way up and not hockey sticking its way up.
Makes sense. So again, just want to reiterate, the software is free, correct?
Yep.
Okay. So you had mentioned to me that the software reveals trend scores. Is that what we're looking at here, or is that another area?
Nope. So bullish, it'll give you the score right here. So if I'm invested in Tesla, what I like about this is if I'm long, people are like, oh, how do I know when to get out? Well, part of it is you can look at support and resistance levels, but part of it is you can look at the trend score. So if this score is going up, the stock's going up, the trend strengthening. If it's starting to lose signal strength, it'll still say bullish, but it might go from 0.47 to 0.41 to 0.35. And once it starts losing trend score, the stock will be going down. It'll flip back to neutral. And then you got to make your own decision. Like, hey, do I think it's going to pull back to a point where there is support that has a confluence of 9 or 10, and I'm going to buy that dip? And that's part of my strategy is, if I'm long something, so if I think gold's going to do well next year and GDX is doing well, I'll buy those dips. But a lot of people like, how do you figure out where support is? You use software like this, it'll tell you where support is. You buy those dips at that level, and then hopefully it goes back up.
So can you run a chart on the trend line itself?
Yep. We do have ads. That's kind of how I pay for my overhead, but I'm trying to keep this free to help as many people as we can. So trend score. So this is Tesla. It'll give you, what the slope is and what the R square is. And those basically, trying to figure out how to say this in an easy way. It tells you how likely a stock is to trade within that trend. So the higher the R square, the better basically the trend score, and the more likely it'll stay in that channel, if that makes sense. You see people on Twitter, they'll draw kind of triangles of like, or like parallel bars of like, hey, stock's trading within this trend line. So that's kind of what we look for too, is you want an upward sloping trading channel. Like you see, that's a very strong, uptrend. That's still strong, but not as strong as like that's a major breakout right there. And it consolidated a little bit, it pulled back to where there's support, and then it took off again.
So I want to reiterate for everyone listening, your success rate over the last 5 years using the software, and of course, your background is 64% win rate, which is 14% higher than the average, or
Yep.
roughly.
Yep.
Yeah. Is there anything else within the software that you want to share? One of the questions I had for you the last time was, if I have, 10 stocks, 20 stocks in my portfolio, is there a place that I could store that inside the software and then just come there for easy watching and review?
Yep. So we have a watch list. All you need to do is on the top right, you need to create an account. Again, it's free. We just have your email, so we can email you updates, on the site, something we might see going on with the market. But I make watch lists of all these different sectors. So royalty sector. So these are all the different royalty companies I follow. I know people who create accounts, current holdings, watch list of things I want to buy. You can do it by sector. And then, I put this in October. That was the entry. That's what it was at recently. Here's the overall trend score. It's bearish, short term. And then again, you can click on it and it'll pull up, the same thing we were looking at before. It'll tell you support and resistance levels.
So one of the things that you're looking for on your watch list is a turn from either neutral or bearish to bullish, and then you'll do a little bit more analysis within that specific.
Yep. Yep. So like Venom's one of my favorite, Viper Energy, VNMOM, like that's a very strong support. So in an ideal world, you're watching the scores, and if you see if something's neutral, but the score's increasing, that means it could flip to bullish. So that's where I use the software to help, try to anticipate breakouts. And your biggest movements are when from stocks flip from like neutral to bullish. That's when a stock's breaking out. Sometimes like your higher volatility stocks, like some of the crypto stocks, they'll go from bearish to bullish, bullish to bearish a couple times within the same week because they just have so much volatility built in. But again, I look at trend score and then I keep things really simple. Like I try not to be long anything that's bearish trend because you're just going to ride it down. And then anything that's bullish trend, I look for pullbacks that have a lot of confluence support, and then I buy those dips.
How good is the predictability on the breakouts?
I think pretty accurate. It's hard to measure exactly because there's just so much data, but it's what I use to trade. So if it wasn't accurate, my win rate would be a lot less than what it is.
Yeah. Well, Kevin, this has been a fantastic conversation, and I really appreciate the walkthrough on the software that is free, that has helped you have almost a 2/3 percentage win rate. It's amazing. Before we wrap up here, and I ask Kevin our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Kevin as much as I have. Please let him know by hitting the like and subscribe button and leaving a comment below the video. It's now time for the Golden Nugget segment. Kevin, you're a technical analyst. You've worked behind the scenes with John Mnt&x Consulting Company and Don Duret's Gold and Silver Tracking Company. You have this experience that not every investor has. You've kind of touched on this a little bit, but just to give assurance, does an investor watching right now need to have technical analysis capabilities to use, understand, and benefit from your software StockTA, or will StockTA help guide through some technical analysis even for the novice?
We try to keep it really simple so it's even the novice can understand. And we created a YouTube channel, and on that channel, it's at StockTA. I have a video series. It's a 4-part series on how to use it and how the technical analysis works, for a little deeper understanding for people who may not, I was previously a fundamental investor. I've gone through different phases where I was a value investor, I was a fundamental investor, and then over the years, as I learned more about technical analysis, I was like, this is how I'm going to be. And it took me, I've been trading for almost 20 years. Like, it's taken me a long time to get to that point. So for somebody who's new to trading or still learning, I think this site could really help speed up your learning curve. And if you want to try technical analysis, I think this is, I'm trying to give people more tools in their toolbox. Like, if all you have is a hammer in your toolbox and you're running around just trying to nail everything, eventually that's going to come back to bite you. So if I can give people a few more tools to fight back against what I think is a very rigged game with how Wall Street's set up right now, like that's my goal with this. And I'm hoping, I'm not guaranteeing this will work. Like, you still got to have a process, but I implemented this into my process and it's made me a much better trader. And it's helped, like, I paid for my grad school, paid off my wife's college loans. I bought a car. Like, it's offered me another avenue to increase the quality of my life. And that's where I'm hoping. I hate seeing people post, like, I lost my retirement fund because I didn't know what I was doing. Like, that stuff, like, it's really sad that we still have that in a society, as modern as we are today. So if this site can help people, even just, even if you just make $100, it's still better than losing $100. Like, it just incrementally, like, trying to grow your wealth so you can have a better retirement is what I'm trying to do.
Well, we really appreciate you developing, expanding, creating this software and making it available for public use for free. It's incredible. Kevin, thank you for coming on to Metals and Miners, for being so generous with your time, analysis, your ideas, and the walkthrough on the software. It's been fantastic to spend the time with you to learn about the software. I've really enjoyed it. Would you please share with the viewers any important message you want to leave with those tuning in, where they can learn more about your work and how they can connect with you directly?
Yeah, please check out our website. It's stockta.com. Again, it's free. You can create an account, create all the watch lists you want. If you want to learn more on how to use the site, head over to our YouTube channel at StockTA. We have a Twitter account where I try to post stuff daily, and then I'll put my email in the show notes so you can send out. But my email is kevin@stockta.com if anybody wants to reach out. I love connecting with different people from podcasts. I've gone on a few, and sometimes I learn more from the users than they might learn from me. So it's great connecting with people and hearing their trading story. And, I love learning other people's process and how they do things because I'm always trying to get better. So if I can learn something and get 1% better, it's worth it.
Outstanding. Well, I'm going to put all the information you just mentioned up on the screen at this part here in the video. I'm also going to have it in the description area for everyone to click through. Guys, you need to go check out the software, play around with it, use it. It's going to enhance your current system and I would imagine your win rate, just as it has done for Kevin. Connect with him, follow him, and as he's adding and improving the software and expanding it and even expanding his offering, you'll be the first to know because you're tied in with him. Kevin and I have been connected now for several months and have had multiple conversations, and I really appreciate what Kevin is doing. So, Kevin, thank you again for being here. I look forward to having you back on sometime soon. And everybody else, thank you for watching. to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.